Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish cycle scenario where we're looking for multiple 1-2s to the upside where the green wave 2 is finished and we are now looking for price to move to the upside in the blue wave 1. To get a better idea of a target for the blue wave 1, we have to look at the previous wave 1s, and you can see that the previous wave 1s actually went to the 0.618 trend-based fib extension, which if we look at the blue wave 1 would give us a target around 100k. I also put the 0.5 and the 786 on the chart for a bit of a range between 75k and 180k. Now, if we look at time, then you can see that the yellow wave 1 was actually shorter in time than the red wave 1 as it reached the 0.786 in length, which is the length of this wave 1 compared to the red wave 1, meaning it is shorter. But the green wave 1 is actually the same length in time as the yellow wave 1. Now, taking this into account for the high of a potential blue wave 1, we can estimate the target between the 1st of September 24 and the 1st of October 25. That is the range we are then looking for. Now you also see two bars patterns on my chart over here. And this bars pattern comes from the COVID dump, as you can see. So let's compare the beginning of this bull market with how price is doing now. So if I put this on the chart, then you can see we are pretty much at the same price levels following the expectation of how price moved over here. Of course, the structure is a bit different, but we're pretty much at the same level. If we then compare it with the beginning of the bull market we had all the way over here, then if I put this on top of the current price section, you can also see we're actually doing pretty okay, everything considering. Yes, we went sideways for a long time, but as you can see, we also went sideways in this bull market for a long time, for many months. So we're actually doing pretty okay. If we then zoom in to this structure over here and go to the macro bullish scenario, then we are looking at this scenario over here. So this is the green wave 1, the finished green wave 2, and you're looking for upside. Now the green wave 2 just missed out on the 0.5 and finished just before the 0.382, which on lower time frames is definitely less common, but on these higher time frames, as shown as well, comparing this wave 2 with this wave 2, by the way, in time, these are the same in time, which therefore then increases probabilities. This is the low. So this wave 2 in green is the exact wave 2 as the wave 2 in yellow, the exact same amount of time, increasing the probabilities. This is the low for the bullish scenario. Now over here, you again see the two bars patterns on the chart. So just to compare now on a lower time frame, which then is the weekly time frame, this over here, COVID dump. So you can see if I put this on the chart, pretty much now approaching levels that we had over here as well before the COVID dump eventually happened. And if I put this one right on top, it's a bit difficult because of the big wick, but as you can see, we're pretty much at the same levels. If we now look at the high time frame bullish scenario, so we go to the daily, then the bullish scenario is that the low is already in here and we are looking for a move to the upside. So wave 1 or A is finished, a 3-wave structure for a wave 2 or a wave B, corrective structure for then a wave C or 3 to the upside. Wave 2 or B retraced to the 0.382, which is interesting because the 382 taken from the low to the high is a common target for a wave B, but a less common target for a wave 2. And that is something we do have to remember for the targets of a wave C or potentially a wave 3. If we look for a wave C to the upside, then the most common target is between the 1 and the 1.236 here, which is between 40.4k and 44k. And the 1.618, usually a minimum target for wave 3, is sitting at right about 50k. Now you also see a 1-to-1 on the chart, which is a fib time taken from the low to the high of A to the low of B. It's a purple one, as you can see. So if price is reaching this target box around the 1-to-1, which is currently sitting on November 2024, then the probabilities are higher. It's a wave C. If price can continue its way to the upside very sharp and reach these levels much quicker than the 1-to-1, probabilities increase. We're talking about a wave 3 and we can look for 50k. If we then zoom out again, go to the cycle scenario and look at the bearish scenario, then in this case, we have a finished 5-wave structure to the upside in a wave 1. We are then looking for a multi-year bear market in a wave 2 for then continuation to the upside in a bigger wave 3. Now, most commonly, wave 2s tend to retrace between the 0.5 and the 786, which doesn't make sense here, as that's $400 to $20, imagine. But then again, on these higher time frames, we have to think a little bit differently, where the 236 for me is going to be a maximum target, sitting at 6K, but we also have great support a little bit higher, which I'll show you in a second. I also put fib times on the chart. You can see the 0.236 and the 0.382, which is important for a wave 2. This can be an interesting target area for a potential low of a wave 2 on this monthly time frame, which then gives you a target between April 24 and September 25. For then the low of the bear market and continuation to the upside, where I actually don't really want to see the low over here being taken at 3K. Same with the bullish scenario over here. That would be for me the invalidation. Well, clearly, because we're thinking about a 1-2-1-2, so that is the invalidation. Now, if we then zoom in, go to the bearish scenario on the macro time frame, then in the bearish scenario we are looking still for a little bit more upside. So here we have the finished structure. We are now looking for a multi-year bear market to the downside, and in the side of this wave B we are then looking for a zigzag, an ABC to the upside, where we have very important resistance between the golden pocket and the 786, because the golden pocket is in confluence with the point of control, 786 with the value area high, golden pocket at 39K, 786 at about 50K. So 39 to 40K, 48 to 50K, very, very important resistance indeed. Now on the logarithmic chart, the target for wave C would be all the way up here, with the 1-to-1 being bang on top of the 786 at 50K for the potential high of this wave C for then wave A, wave B, wave C, and then you want to see a move towards the downside. Interestingly though, if you turn logarithmic chart off, then you can see the target for wave C is much, much lower, because then it's between 40K and 44K. But as we know, 40K is important because of the point of control, and 50K is important because of the value area high. So it's going to be incredibly interesting to see the reaction over here for the potential highs of a wave C. And then we're looking for another move to the downside, where the most common target for wave C is between the 1 and the 1.236, between 12K and 8K, on top of the golden pocket, which is taken from the low to the high, as well as the value area high from this multi-year volume profile at 9.7K. Now, if we then zoom in to this structure over here and actually look at the bearish high time frame scenario on the daily, then in this particular scenario, we are looking for a three-wave structure with more downside to come still before we get a continuation to the upside. So in general, probabilities are still higher to move to the upside to 39 to 50K. But in this particular scenario, we are looking for a three-wave structure, an expanding flat to the downside, where the 0.5 to the 786 for a wave 2 is the most common target, and for a wave B is just as common as the 382, and this gives you a target between 23.6K and 19K, with the fibs taken from the low to this high over here. Now what you can also see is that currently price is ranging in between the 1.38 to the 1.236, which is the most common target for a wave B, and then a potential A, B, and then looking for a wave C to the downside before we then turn around and move towards the upside, and then a purple wave C, or we're looking for a much bigger wave to the upside in the wave 3. Now in the bearish scenario, we are then of course looking for a wave C to the upside and then a continuation to the downside. So if we then look at the probabilities of the different scenarios, then on the cycle at the moment, there's no reason to think we're bearish, just because we are not even close to 15.4K, and also more locally we're still expecting 39.40 to 50K to be hit, and then we have to observe the reaction over there, which is then also what the probabilities for me are on the macro time frame over here, where I write, well, on the macro we are still looking for price to move to the upside 40 to 50K, where we have to observe the reaction. Now the probabilities between the daily bullish and bearish scenario is something that I really keep an eye on the daily updates. Do we get that continuation, or do we fall towards the downside? At the moment, looking at this structure, one can say, well, continuation looks more probable, and that is true. I also still expect probabilities higher to take the local high. However, we are not yet out of the danger zone for a potential flat pattern. So the probabilities as it stands might be higher for continuation, but after these highs are taken over here, if that happens, we really have to pay attention to a potential move to the downside, which of course is what I do in the daily updates for you all. So at the moment it's a little bit neutral, but on the daily updates, that is where I go into the probabilities of price continuing or price potentially moving to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD for day trading mainly. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.